Hi, my name is Nikita Tisera, and along with our cluster CEO, Senaka Kakiriwaragodage, we're setting up a series of conversations to try to demystify investments. So, we are having conversations and we're trying to ask the right questions from those who we deem to have done well in this field and across asset classes, and in this particular case across geographies. Seneca and I had a wonderful conversation with Mike on emerging markets, on his screening process and his thesis on Sri Lanka, and we hope you love it as much as we love talking to him. Hi. So today we have Mike McGoy, and Mike is the founder and the chief fund manager for Research Alpha. And Research Alpha is a specialized fund looking at markets that are coined exotic. And Mike has been looking at emerging markets and frontier markets for. He's actually one of the foremost emerging and frontier market investors in the history of frontier markets. And Research Alpha holds stocks in Uzbekistan, Egypt, Argentina, uh, and Mike has also been looking at Sri Lanka from the early 90s, from his days at Crosby Securities, and he remembers. He's been looking at Sri Lanka long enough to remember companies like Vanik and Blue Diamond. So he's been looking at Sri Lanka for a very long time. Thanks, Mike. Thanks for joining us and doing this. We are stoked to have you here.
Okay, thanks for having me.
So let's start with a little background and tell me how you ended up with the exotics and not like probably being a tech analyst like how I imagine your peers would be in Wall Street.
Yeah.
What brings you to this far end?
Well, it all started out actually with I picked up The Economist when I was working at a high-end retail department store or shopping mall when I was in high school. And I'd never really thought much of the outside. Like many Americans, we don't think too much of the outside world, to be honest with
Sure.
you. And I just picked my interest. I was collecting stamps when I was a kid, and just started thinking about doing something outside the United States. And then I got the chance to spend the third year of my 4-year university program in Hong Kong. So I went to the Chinese University of Hong Kong for my junior year, where I'd studied Chinese as well as economics and politics of the region. And that really changed my life, obviously. After going back and working for a year in New York after graduating, I went back to Hong Kong on a one-way plane ticket and do or die. One of the industries that was hiring fresh graduates was the investment banking and the research business in Hong Kong. And again, it was very much of an emerging market back then, or what would be termed the frontier markets. This is in the mid 1980s, and luckily I got a job and was able to stay there for the first couple of months to run the business. And I actually was hired as a China analyst just before Tiananmen Square incident in June of 1989. So I thought I'd be fired after that because you don't need a China analyst if there's not much is going to happen in China after that incident, or that situation. But luckily, at least for me, the Indonesian stock market opened up for foreign investment in July of the same year, July 1989. So since I was a new kid on the block and I wasn't doing too much, they sent me to Jakarta with one of those big, they called them portable computers, but it looked like a small refrigerator. They sent me down there to start writing research on Indonesian companies. And that's where I kind of got the knack or experience of looking at markets or looking at things where other people have not been looking before.
Mike, could you give us some view of your emerging market, frontier market experience starting from those Indonesia days? Probably the Asian financial crisis is something that you would like to mention?
Oh, sure. Yeah. So I was in Indonesia from 1989 till about 1992. Then I was the head of research for the Indian subcontinent from about 1992 to 1994. And that was just when the Indonesian subcontinent markets, Sri Lanka, Pakistan, India, started to open up for foreign investment. And then I was, during the Asian financial crisis, I was actually living in the U.S. I had done a private equity stint in between the subcontinent and working in the subcontinent. And then I worked in mainland China in Beijing for a couple of years for our private equity fund. And the Asian financial crisis hit. And I was actually in San Francisco at the time. So I missed all the fun. I just invested in a house there. I was trying to make that the home for a couple of years before coming back to Asia. But then I got stuck there. People were saying nothing was happening in Asia at the time. Ended up staying in San Francisco, following the region, doing a variety of things, consulting for funds, doing some investor relations work. But I missed a lot of the Asian financial crisis. But looking back on it, things that we looked at in Indonesia at the time and we knew were really good investments, it turns out the best time to invest in those companies was during the Asian financial crisis.
Did you make any notable investments? Is there one or two investments you would like to reflect on? One of your...
Well, I can tell you the one I wish I made. And that's one reason I started the fund, is because I missed those investments at the time. But reflecting on how well they've done, now I want to take advantage of the similar situations. So in the early 1990s, I wrote a report about Indonesian business groups. And one of the groups that we really liked a lot was called Astra International. And there was another group that we didn't like very much. And during the Asian financial crisis, or the height of the Asian financial crisis, or the low point, I should say, of the Asian financial crisis, when in the spring of 1998, when things were really looking dire in Indonesia, if you had bought the company we liked, it was a company called Astra International. It has distributorships for Komatsu and Toyota in Indonesia. Very well-run company. The parent company is listed. They had a reputation of hiring everybody, no matter what your race is, based on how well you did. It's very meritocratic hiring phase. So it was known by local Indonesians as a good place to go, where you could, if you do well, worked hard, and were smart, you could get ahead. No real glass ceiling. So to make a long story short, if you invested in that company at the bottom of the Asian financial crisis till 14 years later, you would have made 200 times your money in US dollars.
Whoa.
That's not including dividends or dividends being reinvested.
Okay.
So $1 million would have gone to $200 million in 14 years. So that's really, really incredible return.
Absolutely.
I forget the CAGR exactly, but it was in the 30-35% range, if I'm not mistaken. So based on that, I mean, we knew that going into the financial crisis. We knew that was a great company. Nobody I knew pulled the trigger at that point. I know one guy who got in a few years later and just rode the wave. In fact, looking back on the statistics, 8% of the companies that were listed in Indonesia at that time went on to be 100-baggers in the next 15 years.
Okay.
So that's not bad. You just held, 8%. If you held 15 stocks on average, and you just guessed, you'd probably have a 100-bagger in your portfolio if you were stuck in Indonesia. And again, that's not dividends or dividends being reinvested. So just massive, massive returns if you had the wherewithal to invest at the bottom.
Wow.
And that parallels with what I've read about other famous investors. There's a guy named Sir John Templeton. He's the founder of the Templeton Funds. He got his start by investing, I think, 50 or 100 stocks at the bottom of the American Depression in 1929 or 1933. I forget exactly when he did. But that basically led him on to become one of the world's greatest investors and a very wealthy individual.
So as they say, you want to buy when the blood is on the street, isn't it?
Well, that doesn't always work. I tried that in Ukraine when there literally was blood on the street.
Okay.
And that did not work out for me. This is not for my fund, but for my personal investment before I started the fund.
Is the recent round, or
Sorry?
recently in Ukraine?
No, this was in I forget what they call it, the Maidan Revolution in 2014, I believe it was.
Okay.
And I was in Ukraine that week when they had the protests and the violence in the square, and it was not a good time. Basically, I try to stay away from geopolitics and things like that. and focus more on the financial crisis.
So, Mike, what kind of parallels do you think you could draw from all of the financial crisis that you have had front row exposure to? So, I'm talking about the Southeast Asian currency crisis that you were very much in the middle of. Then the GFC in 2007, 2008, and now that you're here, what we are going through. What's the lowest common denominator and between all of the 100 baggers that you've seen?
Well, I haven't had any 100 baggers yet,
Yeah.
unfortunately. So hopefully, inshallah, hopefully I will, knock on wood.
Inshallah.
And I guess if anything, it's just, you kind of have four things you're looking at. You want to get, and when you're investing, you want to get as much on your side as possible. So you have kind of four factors you look at. You look at fundamentals, technicals, behavior. Is there a lot of bad news there, and behavioral finance, and there's just one other that escapes me right now. But basically, if you have all four of these things line up at the same time, then it tends to be a really good place to invest. So one thing that defines a lot of this is just a super amount of negative news, in kind of a behavioral aspect. You have a lot of negative news in the market. So when I came to Sri Lanka, everybody said this is the worst it's ever been. We're in the biggest financial crisis ever. And you could kind of see it in the charts and the technicals, where if you plotted the Sri Lanka, is the composite index, all share index, I believe it's called.
All share index.
If you plotted that in gold terms going back about 35 years, you were at what they call a chart pattern of a double bottom.
Right.
So if you think of gold as the international inflation hedge or inflation benchmark, to me it seemed like a really good time to invest because things were very negative. It looks like you reached a technical bottom. The companies were still doing pretty well, and it went from being a pretty expensive market to one of the world's cheapest in the space of maybe 18 months, I think.
Sure. Yeah.
So those are the similar parallels you saw in Greece in 2012, or Argentina when we invested there in 2019, or Turkey in September or the summer of 2018. Very, very similar patterns, and in terms of the technicals, the behavioral aspects.
To what extent do you use technicals?
Not much, actually. In fact, if I use them too much, I'm not a short-term trader.
Sure.
But when I see long-term charts where you're plotting a 35-year security or index in U.S. dollar or some base currency or the gold terms, and you see something that kind of sticks out in your mind and say a double bottom or triple bottom, and it's not coming back or it's bouncing off that bottom, that tends to be something that's helpful.
Mike, in terms of investing in a crisis-ridden place, I think it's important to gauge when it will come out of the possibility of it coming out of it as well, right? Because, say, we've seen places like Lebanon, Zimbabwe, which hasn't really come off the crisis. So how do you see Sri Lanka in that context? What's your gauge? Are you satisfied about the recovery we have made so far? And are you hopeful about a bounce back?
Well, I'm always helpful. So Sri Lanka now is the third largest position in our portfolio. Coming here, I'm a little bit more. Again, I'm not. It's really hard to judge what the politicians and the economists are going to do. You guys are going into an election season. I think you're going to have elections that have to be called within the next year or 15 months. So that's always a dicey time, because as you get closer to those elections and we don't have a clear winner or a clear person that we think is going to win, the uncertainty increase. So I think tactically or kind of short-termish, then it's going to be kind of dicey, at least in terms of my opinion, of course. But long-term, I think, as long as the people stick to the reform program, Sri Lanka will do well. And my personally belief is that there's so much talent here, so many smart people here, that they will somehow the reform program, knock on wood, inshallah, that it will continue. Because I'm 58 now. I'm kind of, I hate to criticize a country where people are so nice to me and so friendly to me, but there's just a lot of waste here, to be honest, waste of talent. And I think one thing I've gotten from the last week of visiting companies here and talking to people is that a lot of people are leaving. And so people are voting with their feet. The talent's saying, we know we're valuable. We're going to go someplace where somebody's going to value us. Instead of the regulations here seem to be, the regulations seem to be so much that people here can't express their talent, or they can't live up to their full potential, I guess is what I'm saying.
Yeah.
And I apologize for being
So thanks for
critical.
that comment, appreciating that Sri Lanka has talent. I agree with you. In fact, brain drain has been quite a challenge as for us as well, being people running intellectual capital driven businesses. You need talent, right? I think even macro-wise, even the people who matter understands that's a big challenge. I think we need to take remedial steps as soon as possible to address that.
For me, a lot of it, you're investing in companies. You're not investing in the economy. And the fourth thing that I forgot to mention before, the things I'm looking at is valuation. And companies here are still really inexpensive, particularly if you look at it at a gold basis, or if you look at 10-year average earnings in US dollars, or even Sri Lankan rupees, you have a lot of value in the market here.
Yeah, I think simply in terms of the dollar valuations, I think the market has been really
Absolutely tanked.
gone down because of the currency depreciation as well.
That's correct.
Yeah.
Like in one of the earlier conversations we've had, I think probably a couple of years back, I remember you telling me that you would rather run towards a financial crisis and not so much a political crisis. Can you unpack that for us?
Oh, sure. I guess Ukraine is a good example of that.
Oh.
You don't know when geopolitics is going to change, or when politicians are going to change. But you kind of think that a financial crisis, you kind of know what can be worked out. Most crises are preceded by high levels of debt, at whether personal or corporate or government levels, typically all three at the same time. And you know that eventually that'll work its way out, as long as you have, and the freer the economy, the faster it works its way out. So it's just by human nature, people like to spend, and they like to spend at the top. They buy stocks at the top. They splurge on BMWs and Mercedes and big houses when the market's doing really, really well, and they leverage up for that. Once interest rates go up and there's people can't pay their debt, things tend to crash pretty quickly. And I think something like that happened in Sri Lanka.
Absolutely.
And that's why I'm here.
Like in the global context, where we see globally, particularly in the developed countries where the interest rates are and inflation on a real upward rising trend, how do you see the capital allocation towards this part of the world, emerging frontier markets in general, and how we can be hopeful to attract some money? Because it will be challenging, isn't it? In the broader scheme of things, the money would tend to go back to those developed countries with the high interest rate regimes. How do you see that situation?
I think a lot of it just, as long as you stay competitive, I don't want to think so much, think of where you are in broader context, but don't try to game the system too much. Do what's good for the local people, what's going to keep people in Sri Lanka, what's going to further your businesses here. How can you make things that are very inefficient, like the railway system I took yesterday, or Sri Lankan Airlines, where I had difficulty canceling a ticket, that has too many people. I hear there's privatizations, like the Sri Lanka insurance company is going to go private. Those are all very good things. The biggest question I have is, will it happen? And if it does happen, will it be reversed? So as I understand it, or I just learned last week, Sri Lanka insurance company went private before, and then it became a government entity again. Will that be reversed? I talked to one company here. They have 14 unions in the one company. That must take an awful lot of management time and take them away from their main focus of doing a good business for their customers and their shareholders, if they're managing 14 unions. So those are the kind of things that I don't know how you fix it. I'm not responsible for that. But those are the kind of things that I think it somehow should be reformed, and that would help you keep more people in Sri Lanka. Sri Lankans do so well abroad. And I imagine a lot of those people, like myself, are very patriotic and love their country like I love my country. And I'm sure a lot of those people would want to stay in Sri Lanka. And like I said before, it'd be nice to see some more reforms so that people can live up to their potential here.
Completely agree with you. I think the best thing that we can extract out of this crisis is to do those reforms which were probably long outstanding where we couldn't do. But the crisis has forced us to do few things and make use it as an opportunity. Don't let the crisis go waste.
I just hope there's, it seems like the reform program is good, but there's still a lot more that needs to happen, or at least that I think would be beneficial for Sri Lanka. It'll be painful, and I don't envy the person that's going, for the average Sri Lankan that's going to go over the next couple of years if you do the reform program. But, just as Indonesia came out of their crisis after making the reforms and streamlining the businesses, they came out much better. So it's like exercise, short-term pain for long-term gain.
Looking at everything else in your basket, all the other countries, and all of them, I think what they share is they've had a fair amount of pain, hence your investment in it. And how happy are you with our turnaround, with our exposure to new reforms?
Well, I think it's pretty impressive, especially on the inflation front. You've gone from 70% inflation a year ago down to about 2% now. So it on the macro side, it looks very impressive.
Okay.
But again, I'm looking more on the corporate side. So I think of what's going to help the corporates. And so I tend to look more at the privatizations, because that's really where the reform is going to help.
Because the last time you were here, that was 2 years ago, we were probably at our darkest.
Just 1 year ago. I was here
year,
June 2022, and there's literally no gas here.
Correct.
So I had to cut my trip short. But, so I think things are progressing. It seems like it's going the right way. But that's kind of my question for you guys, actually. That's kind of one of the reasons I'm here, is to find out, to hear what you guys have to say.
So I guess you invested something last year?
Yeah, so Sri Lanka now is the third largest country exposure we have after Argentina and Turkey.
What would you like to see the investee companies of yours, the corporates, to do in terms of giving that alpha or the superior gain as a shareholder? What would you like them to do, just from a Sri Lankan corporate perspective?
Stick to their guns, do what they do best, just like investing anywhere. Do what you say you're going to do. Take advantage of any reforms that come through. Just be responsible, shareholder-friendly business people. So I look at three things. I look at people, structure, and value. So I'm looking for companies that are managed by good people, that has a structure that aligns minority and majority shareholder interests, where there's, I don't know what's happening in Sri Lanka, but in most places where I invest, there's some companies where they can transfer profits outside the listed company into a group shareholding company.
Sure.
That's very sensitive to that. And there's valuation, and people structure value. And for valuation, things are really, really inexpensive here and during a crisis. So a lot of times I don't have to look at value. I can just focus on the people and the structure.
I completely agree with you. I mean, with the little private equity experience that I have, I think people probably would really come on top, because even a crisis and how to manage a situation, if you back the right people, they'll find a way through it. But if it's the wrong people, no matter what you do, it'll be a difficult equation.
I think we see 100% alike on that one. And I think that's one thing that when you asked me before we started the conversation, before we started the taping, about how it generated alpha. And I think that's one way to generate alpha, is because so many people on the sell side, you're not writing about the people themselves. You're just looking at the numbers. And the first question you have to ask yourself is, it's almost like a private equity or an angel investment. Would I trust this guy with my money? Or would I trust this woman with my money? And if the answer is that, then you start looking at the business and how they're doing. And I think that's a key aspect of love. And a lot of times, because the sell side is owned by investment banks, you can't really write about the people, because if you write about the person who owns the company, then the person that your investment banking team might get mad at you if you write anything that's not completely positive about that person.
Agree.
So to make a long story short, it's one of those things. It's under researched, I think, by our community.
Completely agree. I mean, it's an important due diligence matter, isn't it? The people.
I think it is, but it's always hard to make it's a very qualitative decision. It's very difficult to make a decision whether this person or this group of people is running the company long term the way you'd want them to be or not. And it's really hard to get that from the government, corporate government statistics. This can always be gamed.
But Mike, now if you take corporate management teams, that can be fluid because people can move between organizations. In that sense, are you looking at a particular promoter specifically or a large shareholder in that regard? Because management teams could be dynamic, isn't it?
That's correct. Yeah. So I'm ultimately looking at who controls the company. So you're not so much the CEO and the CFO. It's more who actually controls the company. So say, to give an example, one of the biggest business groups here is the Haley's Groups. So you have Dominique Pereira as the head of the company, is the head of the group. What exactly his incentives? What is he getting from that? And what kind of decisions would he make that might affect me as a minority shareholder in one of his listed subsidiaries or the group holding company?
I'm really happy that you drilled down on the trifecta, and I've realized that a large portion of the research you do is very qualitative as opposed to numeric. Do you think you could walk us down through your screening process with a slightly micro perspective?
Sure. So when I look in a new market, and one of the things I advertise to new clients, or actually existing clients too, is one thing I can probably do better than almost anybody in the world is to quickly get up to speed on a market that I don't know. So I was looking at Sri Lanka back in 1991, 92, but it was a tiny market at that point, and it's completely changed. So coming back after 23 years last year, and now you have, I think, 325 listed companies here. So it's a very different kettle of fish now. And so the first step of my process is, I'll map each company, starting at the biggest company down to the smallest company, to who owns that company. And a lot of times you have the same pattern in all markets I'm looking at, where you have a lot of companies that are owned by the government. You have big shareholders like Haley's that has, I think, 9 listed companies. John Keel's has, I think, 7 listed companies if you include the holding companies. And that makes it more manageable. So instead of looking at all 323 stocks in the market, you're looking maybe at a handful of big business groups. How's the government managing their companies? Then you have, the subsidiaries of MNCs like, I guess, Nestle Lanka. So it's going to be delisted, but you have Chevron Lubricants as a subsidiary of an MNC. But you kind of break it down into those little buckets. You might come down to maybe 7 to 10 different decisions. And if you make a group and say this group is good, you can look at all the stocks within that group. But if you look at a group that's bad, or say 2 or 3 of these groups are probably taking money from shareholders, then you've just eliminated maybe 20 or 30 stocks right off the bat.
Right. You've also mentioned the 0.6%. Again, this is from a conversation we've had last time.
Oh, yeah.
6 times PE.
Yeah, they have there's a guy named Peter, I think his name is Kundil. He operated a group out of Canada, and he had a very successful track record. And he'd make every November, I think he would do a trip to the cheapest markets in the world.
Right.
And he was looking for 666, and that is 0.6 times companies that are trading at less than 6 times earnings, less than 6.6 times price to book, and at a 6% dividend yield. And that's just something he was looking at for a screen. And that tends to be fun to do. And then you have a lot, I do a lot of quantitative work also. We've done a lot of back testing on markets, and you see that, cheaper markets like Sri Lanka long-term outperform more expensive markets like India and the United States, long-term, of course. And then the quantitative part tends to be pretty easy. So we'll look at maybe, it must be 30, 40, 50 valuation metrics when we look at companies. So my data set provider says I'm downloading tons of data, but that tends to be easy work. You just look at the numbers and you have a feel for what's good and what's bad. And like I said, in a market like Sri Lanka, or Turkey 4 years ago, or Argentina 5 years, other way around, Turkey 5 years ago, Argentina 4 years ago, basically everything's cheap. So that means that you can just focus on the quality of the company, the people, and the structure.
So, what is the catalyst you're looking at?
I don't really look too much at catalysts, to be honest with you.
Okay.
I'm really looking at value, and it's good to know that things are starting to reform, not just here, but other places too. And so when they came in, to me, that's a good signal that I'm not the only one that's seeing value here.
Like as a portfolio manager, as someone investing during the times of crisis, how do you make that asset allocation decision? Are you keeping amount of cash already with you, ready for a crisis, or you are fully invested at a given time? What's your investment philosophy or approach?
Ideally, I'd have cash available for a crisis when it occurs. But it depends. So, we just got some more investors in the last couple of months, so now I have cash. And there's no immediately crisis right now. There's some things I do like and I'm looking at, but there's not like a crisis like there was last year in Sri Lanka. Stocks, Sri Lanka has been one of the best performing markets in the world over the last 12 months in US dollar terms. I think it's up about 60%.
That's correct.
So it's not as fun as it used to be. I still think it's cheap, but it's 60% more expensive than it was last year. So we do have cash now, but it's more of a timing. Ideally, I'd be fully invested because I don't like to sit on cash and not have it work for me.
Now, you've been here in the country for about a week, I guess, Mike. What's your perspective from a tourist?
It's a beautiful country. I just came in from Kandy on the train. Things could definitely be improved. The train, this is kind of funny. I thought, I booked the ticket and I got an executive class, first class ticket, but I was literally the last person on that train to get one. It was a 6 a.m. train leaving from Colombo up to Kandy. But then on the train, it was maybe 75%, 60 to 75% full. And to me, that doesn't make sense. And the only thing I can think of is that the cheap ticket is relatively inexpensive. It's about 2,000 rupees, I think. And so I imagine a lot of people were just buying tickets, assuming they'll go, and maybe they decided that morning they didn't want to go. It's not a whole lot of money, so they didn't go. So that's an underallocation of resources or a misallocation of resources. The guys in Kandy showed me the old switching system there, which is beautiful. It's really interesting. It's an antique. It's 150 years old hand crank switching system, which is kind of interesting from a historical perspective, but it's not comfortable. It's it's not modern. So it's kind of similar to what I've seen in other government-owned companies where things just aren't being updated. And eventually it's just not going to work anymore. You're patching things up. And I would have gladly paid 2 or 3 times more for a ticket if it had been a more comfortable, pleasant experience. So it wasn't bad at all, and I certainly didn't pay a lot of money. But compared to places where I've been, like in Taiwan and other countries, Thailand, it wasn't as nice as it should be, to be honest with you. And again, I hate to criticize, but there's the kind of thing you think about when you're an investor. Because you get, the experience you have, say, going on the train versus going to a John Keel's supermarket is completely different. So as soon as you get into the private sector, things are comfortable, well laid out, very interesting. Prices are very competitive from what I can see. It was packed with people. People are shopping. But when you go on the train, it's a very different experience. I mean, it's very, very different things to compare. But that's what I've noticed.
But these practical insights are important, isn't it? That's how you feel the pulse of how things happen in a particular place, in a country.
That's right, yeah. So it's kind of similar to when I go to other places. If you stay away from the government-owned companies, you'd probably have a better time, a better experience. And there's a lot of government-owned things here.
Even our neighbor India has made huge strides on that front. I think particularly infrastructure, government-led businesses have done wonderfully well.
Yeah, I haven't been there for 10 years, so I can't make any comment on that.
Mike, on that note now, what sectors do you think would lead Sri Lanka in this turnaround? What are the sectors that you're most bullish on? And would love to hear your thesis on those.
Again, I mostly look at the people and the structure.
Okay.
So, one sector we're looking at now is the insurance sector, simply because it's so underpenetrated.
Absolutely underpenetrated.
It's like 1.5-2% people in Sri Lanka have life insurance.
Correct.
But then again, I guess it's been that way for 10 years, and the penetration rate hasn't gone up.
That's correct.
And so we look at everything except for banks.
And the reason you would stay away from banks is
Well, a lot of that, I don't like to analyze them. They're kind of
Sure.
boring. I'd much rather go to a lion factory
Understood.
or, go to Havelock cities or overseas land and actually see the building. But also, banks are inherently leveraged. And when banks go bad, they go really bad. So in Greece, before I started the fund, I invested in Greece, and this is where I actually got the incentive and actually some of the cash to start the fund,
sure.
is that in Greece I decided not to buy any banks. And that turned out to be a great decision because Greek banks are still down, even though they're up a couple times now since the bottom. They're still down, 95% since the top. They recapitalized 2 or 3 times. They had a lot of offshore SPVs, I think. They weren't recognizing assets properly on their balance sheet. So it was just a complete mess. So in general, I don't invest in banks, although there are some great banks in Sri Lanka from what I've heard.
Mike, while you invest in this country, maybe taking advantage of the pricing opportunity, pricing arbitrage, the fact that it is being cheap due to the crisis, do you also look at those corporates to look something bigger, maybe to step outside the country and expand into overseas markets? Is that a way of generating alpha for you? Or it's not, it's something a bonus if it happens? It's mainly the country opportunity that you are looking at.
I'm really looking at a specific, so I'm looking for maybe 3 to 7 great companies here. And I'm taking advantage of the fact the entire market's down. One thing, what they say that the only thing that increases in a crisis is correlation. Everything goes down. So the quality companies as well as the non-quality companies' share prices and currency, of course, tended to decrease or at the same time. So, I'm looking really for quality companies, whether they do it here or depending on the nature of the business, they might be going abroad also. To give an example, in Argentina, we have both a company called Corporación American Airports. It's one of the largest airport owners in the world, and they own airports in Argentina, Uruguay, Brazil, Armenia, and it looks like they might get some contracts in Nigeria. So it's a great business. It's what I call a double negative because during the bottom of COVID, you had it's a very, very negative sector or perceived to be really bad, underperforming sector or sector in a crisis, and the country was in a crisis, and that's now our second biggest holding in the portfolio because the share price is up so much. So that's the kind of company I'm looking at. But at the same time, in Argentina, we also hold a company called Mirgor, which is the biggest cell phone manufacturer and assembler, and they're doing a whole lot of different businesses. And they're basically taking advantage of the fact that a lot of foreign firms are leaving leaving Argentina. So they actually paid $1 for the Samsung manufacturing facilities and business because an American firm that was doing it before was leaving the country.
Okay.
And they just wanted to get out. They assume they're dead, of course. But it's a super low value purchase for them, and they have cash on the balance sheet. But that's almost all purely domestic business. So it really depends. I just really like the management of both those companies, great reputation, good alignment of minority and majority interests. And like I said, the valuation were just fantastic.
Right, Mike. This has been a really great chat, and we've learned so much about the perspective from the other side. Going forward, I think we would really like to see Sri Lanka commanding a much bigger portion of your asset allocation. I think we are on the right track to be on the right track. And thank you so much for doing this.
Oh, thank you for having me.
And I would love to do this again with you sometime soon. Maybe I want to discuss like a few books with you, and we know that you're a voracious reader on the topic. And thank you so much for doing this.
Whatever I could do. I enjoyed it a lot. Thanks a lot.
It's a pleasure talking to you, Mike. Hope when you visit Sri Lanka next time, the markets won't be that cheap.
Okay, me too.